Fitch recently affirmed India's investment grade rating at BBB- on strong growth prospects. Now, what does this imply? Let's discuss. Firstly, it's crucial to understand the role of credit rating agencies like Fitch in the financial world. Now, these agencies assess the creditworthiness of countries much like how your personal credit score evaluates your ability to repay loans. Now, they help investors and lenders make informed decisions about lending money by evaluating factors like a country's governance, political stability, transparency, GDP growth, employment levels, and fiscal discipline. Now, in the world of credit ratings, there are few heavyweights that dominate the scene. The major players include Moody's, S&P Global, and Fitch Ratings. Now, these agencies play a crucial role in assessing the creditworthiness of countries or companies. They use a scale to assign ratings, and at the top of the scale is AAA, indicating the highest level of creditworthiness. Now, as you move down the scale, you will encounter different ratings such as AA, A, BBB, and so forth, each representing varying levels of risk. Now, focusing on India's credit rating. The three major agencies have collectively given India the lowest investment grade rating with a stable outlook. Now, to be specific, Fitch and S&P Global both position India at BBB-, while Moody's rates India at Baa3. Now, recently, Fitch Ratings reaffirmed India's credit rating at BBB-, attributing India's rating to its robust medium-term GDP growth outlook and resilient external finances. However, Fitch points out key concern that acts as constraints on India's rating. Now, the first foremost issue is weak public finances, and other factors include World Bank governance factors and GDP per capita. Now, India has consistently made efforts to present its case to these rating agencies, asserting that its current rating does not accurately reflect the robustness of its economy. Now, the country firmly believes it deserves an upgrade, citing factors such as India's growth prospects, banking sector recovery, steady inflation management, etc. However, these rating agencies have been reluctant to give India a high rating, citing their own reasons. Now, in the midst of these concerns and the ongoing debate over credit ratings, India's credit rating reflects more of a balance between its economic strengths and existing challenges. Now, while efforts to improve the rating are ongoing, the acknowledgement of India's growth potential by Fitch Ratings is a positive. Now, China recently released its economic data for 2023. Let's dive into China's economic performance in 2023. The GDP figures released showed a growth rate of 5.2%, marking one of the lowest rates the country has experienced in the last decade. Now, to put it into perspective, the sluggish growth in 2022 at just 3% was due to the prolonged COVID-19 regulations implemented as part of China's zero-COVID policy. Now, upon lifting these measures at the end of 2022, China set an ambitious growth target of around 5% for the following year. Now, the GDP growth in 2022 exceeded its own target, but the overall Chinese economic landscape is not without its challenges. Now, one notable factor weighing down the economy is the ongoing crisis in the property market. Investment in property development saw a significant decline of 9.6% compared to the previous year. Now, despite exports being a historical growth lever, exports took a hit last year, marking the first decline since 2016. Now, fixed retail investments, industrial production, retail sales all experienced growth but were muted compared to previous years. Now, China also faces longer-term questions over its growth potential after it announced its population fell for the second consecutive year in 2023. Now, interestingly, while many other economies are grappling with crippling inflation, China finds itself in a deflationary scenario. Now, we see the post-pandemic economic rebound for China has been slower than anticipated. China is navigating through multiple challenges, and the recent economic data suggests that the Chinese economy is still not out of the woods. Having said that, this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com